The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
Welcome to the Senior Show
with two wild and aging guys. Hey, Neil. Good afternoon. How are you? How you feeling?
I'm feeling good. A little.
How was your weekend?
Oh, it was very busy. Very busy. How about yours?
This was probably the first weekend that we had absolutely nothing to do.
Oh, that's awesome.
It was unbelievable. Every weekend we've had a wedding. We've been traveling. My son moved into his apartment in Brooklyn. My daughter moved into her apartment in Northport. Dinner. Every weekend has been booked, and here we are. You know, we're on the tail end of August. Summer's almost over, and
right.
and this was the first weekend we got a chance to go to the beach.
Oh, that's awesome.
Yeah, so it was great.
That's awesome.
And you? What's happening in your world?
Oh, let's see. We're doing renovations in the house because we're, instead of downsizing, we decided to upsize.
Well, you know what they call that now, Neil?
What's
because
that?
you got to be politically correct. It's called right sizing.
Oh, right sizing.
Yes, sir. Right sizing.
Right sizing.
So homeowners today in retirement age, when they're looking to relocate, they are now right sizing.
Right. Well, I'm waiting for the. We talked about the capital gains.
Yes, we did.
And I'm a little concerned about selling my property and buying something else because I'm concerned about the capital gains I'm going to have to pay.
And let me guess, Neil. You've been in this house how many years?
About 30.
30 years, and you've probably had several $100,000 of work done to that home.
Oh, yeah, absolutely.
And where are all the receipts, Neil?
They're around.
Right, because you can add that to the pile and
Yes.
cut down that capital gain cost, right?
Right, we know
Yeah.
I have them. They're in a file.
My wife and I had the same conversation because we did a major renovation in 2005.
Right.
Where we blew out the back, we put an extra bedroom, a bathroom, we converted the garage, the two-car garage, into a den, TV room, and then off the side, we put on a two-car garage and a mudroom and a laundry room.
Right.
So that costs a lot of money.
Yep.
And I think I have that folder somewhere in a drawer in my house.
Yeah, I do.
Because I'm going to need that when I sell this house so I can negate some of that capital gains. And I'm really banking on the idea that, and we discussed this, that in Washington, D.C., there are some bills in play right now where they're going to increase that capital gains from $250 to $500 per.
That would be awesome.
Yeah, that, and the truth of the matter is that capital gains number has not been changed since 1977, so it's a little outdated.
I know. There's a lot of things that are outdated with that. Social Security.
Yeah. Hey,
a lot of issues.
Neil, I hate to cut you off, and I apologize,
all right. That's
but it just popped into my head. I'm working with a client now, and maybe you can fill me in more because you're the insurance guy.
Okay.
I'm the reverse guy, right?
Right.
You stay in your lane, I'll stay in my lane. But so here's the deal. This client has and again, most people think reverse mortgage is a last resort, last-ditch effort, but the truth of the matter is the math has told us that a reverse mortgage early in retirement is much more beneficial.
Right.
So this guy has a $4.2 million home. We're going to do a proprietary reverse mortgage on this home. We're going to eliminate his $1.6 million mortgage, which is probably about $9,000-$10,000 a month that he's paying.
Easy.
And his goal really is he wants to leave this lake house to his children, and he also would like to leave a legacy to his children. But the way he says it, he says, "But I don't want to cut back on my lifestyle. I want to live my life."
Right.
I want to slide into second base, holding a cigarette and a beer, and partying like a rock star. And how can I do that? So we've been on several phone calls with him and his advisors about putting a reverse mortgage into the process where now he'll have sufficient funds to cover a life insurance policy.
Right.
That at the end of the day could probably cover the cost of the balance of the reverse mortgage and then also leave his kids, he has 3 kids, probably $1 million plus each with this insurance policy.
Not a bad thought. And there's a reason for doing that. So let's say I left a $4.2 million house to my 3 children. And, one child's doing well. One child's living at home, really doesn't have a job, likes it there. And the third child, they're quite the investor. They want to rent that house out. What happens? You got the one child living at home going, I want to stay here.
I like this place.
And he can't afford to stay, unfortunately. Then you have one, they really want to sell it, and get the best value. And the third wants to rent it out.
Yeah.
Now, this is very, very common.
It's very common.
And, the one that wants to rent it out, they're financially fine. The one that wants to sell it really needs the money. And the one that wants to live there is where I always live. I'm not. So you got a lot of problems here.
Yeah.
But one of the solutions is to buy a life insurance policy where they can each get
their
piece of money. If one wants to buy the other out with that piece of money, they can. But there's nothing more easily divided than a life insurance policy. Now, in a situation like this, they're probably, if they have good advisors, putting that death benefit inside a trust. So there'll be no taxation on that death claim if it's in a trust and the trust owns it. And they're most likely, I don't know the clients, probably buying what they call survivorship insurance, which pays after both deaths. And the reason they're doing that, it gives them a ton of leverage because they're using two lives instead of one, where they can buy a much greater policy than if they bought it on each other.
Yeah. So I thought it was a great conversation. And listen, when we have these conversations, it's not a 20-minute phone call, where do I sign?
Right, of course.
Right. This is a lot of moving parts.
Oh, absolutely.
And, so we're probably into the second or third phone call. We have another phone call scheduled for early September.
Right.
But, I wanted to share this scenario with you because everybody has this misconception about the reverse mortgage as a last resort or last-ditch effort. Let's keep mom and dad in the house. But this is a scenario where he's setting up the remainder of his life. He's still not retired yet, but he plans on retiring in 5 years.
Right.
The wife wanted to retire yesterday, but he's also looking out for the legacy for their children.
Right.
So a reverse mortgage is no longer last resort.
It's not only that, but we were talking before about capital gains. And rather than have a huge capital gain tax, why not use a reverse equity line to buy another property or to insure, to do something else, to whether it's to improve your legacy or maybe he wants to buy another house. But rather than sell his property and A, have to pay capital gains, B, have to maybe have two mortgages or a big mortgage, he can do a reverse where he doesn't necessarily have to pay on it right away if he doesn't want to, but he can pay interest down the road so he doesn't leave a big debt on that house. But he doesn't. It's a good way of avoiding a lot of capital gains and being tax efficient. That's what I like, is the tax efficiency.
Tax efficiency part of it's huge, and that's the part people don't understand.
Right.
Are the tax strategies and tax advantages of the reverse mortgage, very similar to
life insurance.
Yeah.
Well, you need a coordination of experts to pull something like this off properly. One misstep, the wrong attorney, the wrong advice, not positioning the policy correctly inside a trust, and maybe just owning it and messing up your estate and having a big tax bill, and the kids are left with nothing.
That's a
problem.
I was on the phone last night with a client, and same scenario. What we're discussing is not something that you resolve in a 30-minute, 60-minute phone call, because you're not making a decision in a vacuum.
Right.
Right. You just can't talk about, I'm going to take out a reverse mortgage on the house because I want to. No, there's other factors that are involved in this decision process with your home, with your finances, with your legacy. So, like I was on the phone last night with this client, I said, we need to take a deeper dive, because it's not all just about the reverse mortgage in your home, or selling your home and purchasing another home with a reverse mortgage. It's about what your monthly debt is, what your monthly budget is,
right.
How many children do you have, how many grandchildren do you have, what's your goal, where do you want to live, what did your financial advisor, I ask them all the time, what did your financial advisor say? I don't have one. What? Right. So
well, and the other thing is, I've run into this situation for, I'd say, 4 or 5 times a year. It seems like I have a 70-year-old widowed woman or 75-year-old. The house is paid for. They're collecting Social Security. They have a couple kids, same scenario. They don't want to move. They want to stay in their home. And again, they can't necessarily long-term stand up. If something goes wrong with their health, what are they going to do? So a lot of times I'd recommend some sort of reverse equity line of mortgage. Buy an insurance policy that takes care of your long-term care and provides a benefit for the children for the legacy.
That's right. Yeah.
And this way, everybody wins.
Yep.
Everybody
Hey, Neil,
wins.
is that the music I hear?
It is.
Jeez, man, that time flies.
Yes, it does.
So, Neil, what do you do for a living?
I don't know. I'm an insurance wholesaler, and I work with people on their insurance needs. Completely independent. I represent 30 different life insurance, disability, long-term care, fixed annuities, index annuities, and life settlements. So all the insurance planning hopefully comes through me. Whether you do it directly through me or whether you have an agent that needs my advice, I'm here for that.
There you go. And how can they reach you, Neil?
631-647-4694.
Hey, and I'm Tim Kennedy. I am your certified reverse mortgage professional. There's something that we discussed today that piqued your interest. Hey, give us a call. Or give me a call, 516-729-6040. 516-729-6040. Or you can reach me at timtalksreverse.com.
Welcome back to the Senior Show. We are two wild and aging guys. So, Tim, welcome back.
Yeah, man, it's all good.
Before the break, what the heck were we talking about?
We were talking about the scenario where the gentleman had a $4.2 million home and tying in a reverse mortgage and a life insurance policy and trying to create this financial retirement income plan where they can live a relatively comfortable life in retirement or live the life that they've been accustomed to living and also leaving a legacy for their children.
It's a great plan, and plans change.
Yes, they do. There are 18 risks, Neil, that could destroy a retirement income plan. Do you know any of them off the top of your head?
So one of the big things that are happening today that I'm seeing a lot of is what you call, I didn't know the terminology, is gray divorce.
Gray and silver divorce has quadrupled.
Oh, silver.
Has quadrupled over the last 20 years.
I like the silver better than the I don't like to think of myself as being a senior.
Well, Neil, you see it, right? Because we're busy raising children. We're busy building our careers and earning money and accumulating wealth. And then one day you wake up and the kids are gone. You're in the house. You're in this big, huge house with your spouse, and you don't know this person.
Okay, so here we go. So 70-year-old couple, 75-year-old couple, and they say, you know what? I can't live the rest of my life with this person.
Who are you, and what are you doing in my bed?
Okay, so they want to get divorced. So the problem is,
what do they do with their biggest asset? For most of us out there, 70% of our net worth is tied up in our homes.
And one wants to stay there, of course.
In most scenarios, yeah, one wants to stay, one wants to leave. So how do they divvy up this asset, the house?
That's a great question.
So I'm working on a case right now, believe it or not, and it's two married men.
Okay.
And they're getting separated. And they have a $1.7 million house in New Jersey. They're both leaving the home. So the way we're helping them with the reverse mortgages, because now that they're getting separated, right, their incomes are less.
Right.
The amount of money they have is less. So they can't necessarily afford a traditional mortgage at their age. I think they're 71, 72. So the idea is they called me up and said, hey, Tim, I got these two men. They're selling their home. How can we help them find homes? So I am helping both of them now with the reverse for purchase.
Oh, that's interesting.
So they're splitting the house, right? 50-50. They can't afford to use all that money to buy their next house cash because they need that money to live off in retirement.
Right.
So now they're taking a portion of those proceeds as a down payment, and then I'm financing the balance of that purchase with their use of a reverse mortgage.
Right.
And now they're moving into those homes without the obligation of a principal and interest payment. But that's how we were able to split that house with the reverse mortgage in this divorce.
Yeah, like we always say, your house has dollar bills lining the walls. And sometimes you're out of options, that you have no more dollar bills to...
Neil, I say it all the time. You can't take the shingle off the side of the house
Right.
and go pay the electric bill, right?
So-
But you have this equity, this illiquid asset.
Right.
How do you access it?
Right. And the problem was, I hate to say the word traditional thinking, but growing up, your goal was pay off the house, collect Social Security.
It was a great plan, Neil. I mean,
Maybe if you're lucky, you
had
work
a-
for somebody and you'll get a pension.
and you had a pension.
I don't see that anymore. Social Security is going to die in 6 years, 7 years, unless they do something about it, which we have answers on what they can do, but they have to do something, or it's going to run out of money. Pensions companies have moved away from pensions and went to a contributory, like a 401k scenario, so that you contribute your own money and maybe there's a match, or you have to do individual planning, IRAs, Roth IRAs, regular investments, if you are self-employed, or your own retirement plan. So the golden pension and the golden Social Security, and what else you got?
Yeah. I was
got a house.
I have a house. Yeah. I was on the phone the other day, and the guy said, "Yeah, Tim, I don't need a reverse mortgage. I got a Social Security. I got $1 million on my 401k." And I said, "Yeah, I know, but what about your partner?" "I don't have a partner." I said, "Oh yeah, that $1 million? You don't have a partner?" "No, that's all mine. That's all my money. I've been saving my whole life, put all that money in there." I said, "Oh yeah, how about Uncle Sam? You think you have $1 million, you may only have 600 or 700,000 of that."
Right. And
Right.
if you leave it to your children, they get whacked twice.
Yeah.
They got to take it over 10 years.
So now you just put them in a higher tax bracket, which crushes them. You're not doing them any favors.
Right.
And then they got to pay it down in 10 years, right?
And not only they have to take it over 10 years. Not only does it put them in a higher tax bracket, but whatever salary they make or anything else they do, that gets added to that. So that money becomes less as well.
Right. Yeah.
And if you have an estate that's over the estate limit, it's estate taxable and income taxable. So you could potentially leave like 40% of that to your kids when you said, that was my dream, was to leave them $1 million, and you end up leaving them 200,000 hours each. And they go, well, what happened?
Neil, you almost brought a tear to my eye because it's so sad. The idea that that's where it all goes.
It's really sad. So,
but the reason we have this show, Neil, seriously,
Right.
is because we're trying to educate our listeners out there that that's not the route you have to take.
no.
There are tools in the toolbox
Right.
that can help you keep as much of this money as you possibly can.
Well, the best thing that I recommend to people, number one, keep an open mind. Don't think everything stays the same, because it doesn't. Listen, a buddy of mine is a mortgage broker down in Florida. I spoke to him yesterday. He said with this whole Iran war, all his mortgages have stopped. The banks are freezing, so his income has basically stopped. He's got millions of dollars of deals on hold
Yep.
because of the bank. And I'm like, really? I mean, I didn't understand that. And then he said, and plus the interest rates are really high, so people are freaking out.
Yeah, they're ticking up. Yep.
So that combination says, that affected his livelihood. Listen, he's ready to retire. It affects his retirement. Everything changes.
Yep, yep.
So, and the tax laws change. And the tax laws have changed dramatically. And not just, you can call it the big, beautiful bill, whatever you want, but they're not funding Medicaid at the same levels, which is going to create a problem with long-term care planning. The government's not doing certain things. They're giving tax breaks to other people. Well, how does that affect you? That's the key. It doesn't affect you maybe the same way it affects me or the next guy. So you really have to individually plan out, hey, what's my best strategy?
Each scenario is different. But
And-
the idea, you need to do the homework.
And do I revisit it at least annually and say, hey, is there a better way this year? Because everything changed from last year. Okay? I know filling my car up with gas has changed from a month ago. So everything changes. You have to stay up with it. and talk to professionals and get that stuff organized.
Yes, sir. Yeah.
Yeah. So the world changes.
The world changes.
Yes. So what else is on your mind today?
Let me
Tim?
think about that. So, I know the part. Let's go back to the gray and silver divorce for a second.
Yes.
Because I kind of brought up the topic of them selling the house and both going separate ways.
Right.
But in most scenarios, Neil, one spouse wants to stay in the home.
Right.
Right. That's where they raise their children. That's where the pictures are hanging on the wall. They get their hair done, the beauty parlor, this, that, and the other thing. Well, we could help them take the reverse mortgage on that property, stay in that home without a mortgage payment, and then give the departing spouse their share of the house.
Oh, that's a nice
And then help that guy or that gal purchase a home with a reverse for purchase. Neil, I hear the music.
Gray
What
divorce.
What does that mean? Gray and silver divorce.
That's it. I love it. All right, man. I don't love it, but, it's a fact of life. You're listening to The Senior Show, where you have two wild and aging guys. And you want to get a hold of me? It's Neil Himmelstein, Main Street Planning Group, 631-647-4694. And Tim, what's the best way to reach you?
Tim Kennedy, your certified reverse mortgage professional. You can reach me at 516-729-6040, or you can reach me at timtalksreverse.com.